All right, so I've heard a lot of people asking me to, a lot of people have actually asked me questions related to Fibonacci retracement, how to use Fibonacci or something like that. You know that I trade price action, but you can use some of this type of tool, Fibonacci, this type of tool to increase your probability rate of your probability rate as a trader. So because of that, I will be showing you how to use Fibonacci to trade perfectly with price action. So first thing you need to understand is how the market moves. Okay, so let's say for example, okay, we are in an uptrend. In an uptrend, it looks like this: higher high, higher lows, higher highs, higher lows. Okay, higher highs, higher lows, right? Good. So now this is where Fibonacci retracement comes in. This is higher high, this is higher lows, this is higher high, this is higher low. Now, this is where Fibonacci retracement comes in. Whenever you want to buy, first of all, whenever you want to buy in any market, okay, you want to wait for this pullback that happens here, okay? You want to wait for that pullback to happen, this pullback that happen here, this pullback that happen here, then you buy here, this pullback that happen here, then you buy here, this pullback that happen here, you buy here. That is exactly what you want to wait for. Whatever you are trading, always wait for that pullbacks, okay? First of all, there are so many advantages in that. First of all, people who are you don't want to buy into an impulsive move that is already going. That is actually very bad. You don't want to buy an impulsive move. Whenever you see that the market is already going, then you just have to wait, relax, and let the market retrace back. So when that pullback happens, then you take your trade. But you don't just take your trade when pullback happens. So this is where Fibonacci comes in. So if you want to use Fibonacci, you want to make sure that this retracement get to your Fibonacci golden zone level. Okay, I will show you what that means. Okay, this is my Fibonacci. Let me just show you what it means now. Let me take my Fibonacci. Okay, whenever you are in an uptrend, you start from down here and to the highest high, to the last high. Okay, so you start from here and take it to the up, to the highest, to the lowest, the low here, to the high here. Then so when the retracement happens, you can see the retracements come down to touch these two areas. So the first one is 0.5 and the second one is 0.61. You see these two areas, they are the areas that I call the golden zones, or people call them the golden zones. And that those are my major my point of interest. I want the market to retrace down to either 0.5 or 0.6 before I can take a buy position. All right. So if it doesn't retrace down to that particular level, it can retrace down to this 0.78%, this particular last one, that red line. Okay, it can actually retrace down to that particular level, this particular level. So it can happen, it can retrace to, if it retrace to 0, it's fine. If it retrace here, it's fine. If it retrace here, it's fine. If it's in between, it's fine. Okay, so when market retrace down to this level, that is where you want to buy. However, you are not just going to buy the market just like that. Based on my own strategies and what I will do, okay, in this case, whenever I see retracement, what I wait for is, I wait for another confirmation, which is price action pattern, to form at this level before I can take my trade. Because in some cases, price will trace to this level and you can take a buy position, then you just see the market come down to at least to test this level. So because of that, you want to make sure that you confirm that price is already struggling by showing you some kind of price pattern. So what do you want to see in that area, in this particular area? What do you want to see when price get there? You want to see, let's say the price will trace down there. What you want to see is some kind of maybe double bottom. Okay, that is when you take the trade. Or you want to see some kind of reverse head and shoulder pattern. Let's say the market trace there, it pushed up, then give you some lower lows again, then fail to make another lower low, and then do something like this, giving you reverse head and shoulder pattern. This is the first shoulder, head, second shoulder. You want to see this like this. Okay, you want to see it like that in this area. Or, okay, I believe you can see that. Or this thing, you want to see it like this here. Okay, retracement down there and give you this pattern. Then if you see that, you can 100% be sure to take that trade. Although in some cases price will not form this pattern here and will just continue to go upward. So in this case now, what do you need to do? Like, let's look at this. Okay, let's look at this. So what you just do is you take your Fibonacci, start from the recent low here and then to the recent high. Okay, boom. As you can see, okay, you can see price come there. So price will trace down to this point. Then all you just have to wait for is price to give you something like this. No, sorry, let me remove this. It's not cool. You want to see something like this, push up, then struggle down again and push up. So when you see this pattern form, this double bottom or reverse head and shoulder pattern, like I've said, you want to, as soon as you see your candlestick confirmation at the second bottom or the second shoulder, as the case may be, in terms of reverse head and shoulder pattern, that is when you want to, either you see a green candle, engulfing candle, or you see a pin bar or something like that at the second bottom or the second shoulder, you want to take your buy position and hold your trade. Okay, so this is how you want to use your Fibonacci retracement. So let's look at this. Let's apply this into the real market and see what is actually going on. I look at it very well. Okay, so here, okay, from this place to this place is an impulsive move, and this is a retracement. Okay, so let's look at our Fibonacci. So after this, okay, so you can see the price actually pushed up and then retraced to that of Fibonacci retracement. This is where you want to take a buy position, but in this case, there is no double bottom. Okay, there is no double bottom. So the question now remains that in this kind of scenario, what do you do? So if I am the one and I want to take this trade, what I will do in that case is that, okay, when I don't see the double bottom and I can't confirm it and I see the price market is already going, so this is what I will do. Since I know the market is already going, it's not coming back, so you can't take, when the market is already going, don't try to buy, don't try to buy because at the moment, because price can actually retrace, and then you are going to suffer a big loss because of the distance of your stop loss and your entry. Okay, so what you do in this case is that since price has gone and it didn't give you the bottom here, is that you wait. I will, on my own case, I will draw a trend line here, or I may not necessarily draw the trend line. What I will do is that I will just use this my VWAP that you can see here, this indicator that you can see. As soon as the market breaks and retest it, like in this case now here, I will just take the trade. In this case, I will just take the trade. And if you look at it very well, you will see that it's also formed something that looks like reverse head and shoulder pattern. Okay, so you can see it came down here, went up, came down, went up here, then came down here. So you have something that looks like reverse head and shoulder pattern. So I will wait for, in fact, I won't use trend line. Let me be sincere with you. I will just wait for the VWAP, my indicator, to get broken and then retest. That is when I will take this trade. All right. So that is that. So now in this case, how do you use your indicator? So now where the market is, I will use my Fibonacci and just use it like this. Yeah. Okay. So we already have this area as our main area. This is our golden zone. Market has already touched it and is going up. So now I'm waiting for the market to come back. I will test it the second time, forming what we refer to as double bottom around this area. Then if that happens, I'm going to take this trade. However, there is I don't just look at technical analysis as alone. I also look at what's going on in fundamentally, economically around the globe. Right now, Israel is attacking Iran. Iran has retaliated. Israel is planning to fight back. So I don't know how that is going to affect the market yet. Because it actually affect the market here. All this big red candle that happens on, I think, was it on Friday or Thursday? That was as a result of the strike. So if that doesn't, if I don't see any tension affecting the market, then as soon as the market retreats to this level, I will take a buy position. And as you can see that I've already have my setup there. So this is how you want to use Fibonacci retracement. Okay. Let's see if I can give more example before we call it a wrap. Okay, so let me use it for let me use it for a downward let's say in a bearish market. Okay, let's say in a bearish market, it's more or less, it's vice versa, though it's vice versa, but in this case, so the market actually came down here. So let me just show you what's actually going on here. Okay, the market fall down to this point, retrace a little bit, came down, let me just use this one, then came down here and then try to fall down. So in this case, what you just have to do is like in this case, now after this pullback, let's say for example after that pullback, you can just put your Fibonacci retracement count here. Okay, in the case of downward trend, you want to start from high and draw it to low. Okay, so as you can see, the market will trace down to that our Fibonacci retracement. So two things: you can either take the trade like that, take the trade like that, or wait for your price action pattern to form. If my price action pattern did not form, like in this case, as you can see, there is no price action pattern. Let me remove all this jargon so that you can better see what is there. Let me remove the Fibonacci too. You can see it's at the golden zone retracement. So it didn't fall, there is no double bottom there. So I will just wait for the market to either break above the VWAP and then I'll take the trade, or wait for a retest. So in this case, in this area, you can see it has tested. You can see it come up and then we test it. So here I can simply take my trade and then put my stop loss just below out here and then watch trade do its thing. So basically that is how you want to look at or use Fibonacci retracement. I hope this video is helpful. Don't forget to like and subscribe. Okay, so see you in my next video.